I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing.
Americans still waiting for relief from record high inflation.
Worst inflation.
Inflation.
Did you know that while you're sitting here watching this video, the salary you receive or the money that you have in your bank account is losing its value at an alarming rate? In just 1 year, inflation has risen to over 8%, and it's the highest it's ever been in the last 40 years. So what does this mean for normal, everyday people like us? It means that if you had $1,000 in savings last year, that money is now worth about $920. Most people will try to tackle this problem by working more hours or taking on a second or even a third job. But you only have so many hours in a day to work without getting burned out. You see, it wasn't always like this. Back in the 50s and 60s, many American families were living comfortably as single-income households. They were able to afford homes, own cars, and send their kids to university. This was the good old 60s. The world we live in now is very different. Today, even though a lot of families are dual income households, they still struggle to make ends meet. But why is that? In 1960, the median home value was about $11,900, which is equivalent to about $98,000 in today's currency. As of April 2018, the median home value has ballooned to over $210,000. Adjusting for inflation, that's a 114% increase since 1960. Home ownership is not the only thing that has gone up though. If you were renting an apartment in the 60s, you'd have only paid about $71 or about $588 in today's money when factoring in inflation. Compare that to the average rental price of $1,358 in 2017. And this isn't even the worst part. The biggest culprit is a rise in educational costs. If you want a good job to earn a decent wage, you're gonna need a college degree, the price of which has just become astronomically high. Adjusted for inflation, the cost of a one-year term at a public university in the 1970s was around $2,700. Compare that to $9,970 in 2018, which represents a 270% increase in price for a piece of paper. Skyrocketing prices are just one part of the equation though. To make matters worse, we've just come out of a pandemic and we're already dealing with the threat of a global war, unaffordable fuel prices, and the looming risk of a worldwide recession. And you can start to see why today's millennials are struggling to stay afloat, even for dual income households. Data indicates that 29% of American households have less than $1,000 in savings. Alright, so even as I'm shooting and editing this video, the US inflation rate for June has just hit 9.1%. That's right, someone called the Fire Brigade. Having said that, I do honestly believe that by taking some precautions, we might be able to avoid all of this doom and gloom. So in this video, we're going to be looking at how you can safeguard yourself and your assets from an uncertain future. So let's get to it. Before we begin, I'd like to state that this video is not financial advice. I'm just a dude on the internet trying to figure things out for myself. So if you're serious about your finances, you should definitely consider speaking to a professional. Now, with that out of the way, let's try and understand what inflation is and how it affects the economy. When inflation increases, so does the interest rates. And this makes borrowing money through loans or mortgages a lot more expensive. Also, during a period of inflation, your purchasing power decreases. This means that everything from food and essentials to clothing and even fuel now costs more money. A mild inflation is actually good for the economy because people tend to spend more and stock up on supplies before prices go up. But a runaway inflation can be catastrophic for the economy. Now that you have an idea of how inflation works, here are 6 ways to protect your money from inflation. Number 1, and my personal favorite, is real estate. Owning a house during periods of inflation is good because you're essentially hedging yourself against rising costs by having your home value also increase over time. While it is true that mortgage rates go up due to inflation, if you were lucky enough to secure a fixed rate mortgage, then you have nothing to worry about for the next several years. Apart from that, rental prices also go up due to inflation. So if you're renting out your apartment or a portion of your house to a tenant, then that's additional money in your pocket. Honestly, it doesn't take a lot of effort to get into Airbnb. The second best way to save your money from inflation is to invest long-term in the stock market. Now, the key word here is long-term. Why? Because stocks generally suffer in the short term due to fear and negative sentiment from anxious investors. Take Tesla stock, for example. When we look at its 5-year price graph, we see that Tesla has dropped by nearly 50% from a high of $1,220 in November of 2021 to around $650 in June of 2022. Now, there are 2 ways of looking at this chart. If you're a short-term investor, you could argue that the price could go down even further, and you might be right. But if you're looking at it as a long-term strategy, you've just been handed a golden opportunity to grab some Tesla stock at a 50% discount. I love myself a good fire sale. And even if there are any immediate drops in price, there's a good chance that the stock value will only go up over time. Especially since Tesla has increased by nearly 574% in value over the last 5 years alone. Because let's be honest, electric cars are the future. The third option to protect your money from inflation is through tips. And no, I'm not speaking about the tip that you give to a waiter for their exceptional customer service. I'm referring to Treasury inflation-protected securities, which is a type of government bond issued by none other than the US government. The way TIPS works is by factoring in inflation to the face value of the principal amount rather than in its interest rate. What this means is that if you're investing $10,000 into TIPS, and say for example the interest rate is 2%, but inflation is at 8%, then the 8% or the $800 will be added to the principal amount, giving you $10,800 on top of the 2% interest rate. Tips are a pretty good way of maintaining your purchasing power and standard of living in the future. However, when the economy is going through a deflationary period, they don't perform quite as well as other government securities. Number 4 on the list of things to protect your hard-earned dollar is none other than gold. If you're a rapper, this has most likely been your choice of investment for years. If you're not a rapper though, you should probably follow in their lead and get yourself some bling. Jokes aside though, gold is one of those traditional safe haven assets for investors. Gold tends to hold its value quite well during a period of inflation or recession, and it has done so for many decades. This is one of the reasons why investors view this piece of metal as a store of value during tough economic times. If you're looking to stock up on gold, one good option is to actually buy it through an ETF, so you don't have to worry about storing and protecting your loot. Tip number 5 is to invest in commodities during times of inflation. The rate of commodity price increase is tied almost directly to the rate at which inflation grows. So you'd be better protected when the proverbial feces hits the fan.
The shit's gonna hit the fan.
It makes sense if you think about it, because if the price of goods and services were to increase, so does the cost of commodities to produce those goods and services. Commodities, however, can be a volatile asset class since they are influenced by supply and demand dynamics. Take the current price of oil, for example, which has been driven up mainly due to the Russia-Ukraine crisis. Similarly, prices of agricultural commodities like crops and grains can be affected by changes in weather conditions. This is something to keep in mind before making an investment. And finally, the last thing to do to protect yourself from inflation is to reduce non-essential spending. Like, do you really need that newest MacBook or that iPad you've been eyeing for so long? Something to think about. And let's not forget that these 6 tips are just an outline on how you can make your money count. There are several other ways to make sure that you're not getting shafted by inflation. If you're working a job, for example, and you haven't had a pay rise in a while, now might be a good time to make some demands. I mean, if you've been stuck in the same job for the last few years without a pay increment, it's essentially the same as getting a pay cut based on current inflation rates. On the other hand, you can also fight inflation by creating sources of passive income. The internet has become a treasure trove for entrepreneurs and pirates alike. More and more, we're seeing everyday people identifying their skills and selling them online. Like, are you good at making handcraft goods? Then start selling them on Etsy. Or if you love to bake, open an online bakery and give the world a taste of your treats. Or how about if you're good at teaching or public speaking? Then simply start a YouTube channel. Whatever you do, it's important to identify your passions and interests. Once you've done that, check out this video on the 8 best online business ideas that you can start today to generate a passive income. All the best and stay safe. Bye bye.